Hey everybody, today is Sunday, April 21st. We're taking a look at the S&P 500. We're going to start off as we get ready to trade April week 4, we're going to start off by looking at the ES. Futures just opened, and this is a 5-minute view of futures, and we opened with this really big cleansing candle that broke us all the way down here below where we had closed on Thursday, but yet at the same time up higher. And now here we are sort of settling in and maybe deciding, where we're going to go from here. No extraordinarily big orders either way on the depth of market yet, but I do notice this pretty good move going on here in oil. Oil is a great forward indicator for us in that as long as it keeps on rallying, we know all those energy names in the S&P 500 are going to be doing well. And usually oil is a good forward, little leading indicator for us as traders. When we see that roll over, we see that rally, usually the ES and the S&P 500 follow. So that's where we are as we open up futures. Let's take a look at the S&P 500 charts and see where we're at there. Here's the cleared out version of the chart, just to sort of talk about where we are at lately. We're still working on this gap here that we can't seem to quite fill. On Thursday, we came down, we traded through the 10-day simple moving average and almost filled this gap, but not quite. And we reversed and traded back up. We ended up making a higher high at the end of the day, all the way up to 29.0840, which was about 1.99 cents actually shy, or 99 cents above the 2019 closing high that we have been failing to make all this week. But then they pulled back to close us just below it at 29.05. Here is our day that we put in our 2019 closing high. It was on Monday of last week. I made a nice little closing high off of it. The next day we traded that inside day. And then the next day we made a new high, but then we sold off. And then the next day, Wednesday, we made a new high, but then we sold off. So we're not making our closing high, and we keep making, sort of descending down and making, excuse me, a little bit lower low each day. So this was really quite a weird thing. Maybe there was just a lot of short covering. Maybe it was a lot of ripe for the picking. This is really getting people bared up and maybe sucked in short before a big move higher. Or this is what it really looks like, and it looks like weakness. It looks like distribution and weakness before we roll over and sell off. Plus, our simple moving averages are stretched really far apart right now, which is not a healthy thing. Okay, but at the same time, what if the plan is that they're going to, and that our pullback point is going to be something that keeps us from trading below where our low is for the quarter so far for quarter 2. Here was our first trading day here on April 1st. This low we set that day, 28.48, and that marks this huge gap left to the Q1 close. The Q1 high, and this was the 2019 high coming into the quarter until we gapped up and took it out on the very first trading day of Q2. Our Q1 high was here at 28.60. So maybe somewhere between this 28.60 and this 28.50 level is the marker that the market wants to only trade back to and not break down. And if that were the case, if they want a good solid 90 to 100 point pullback in order to get back here, then we're going to have to trade up to like 29.50, 29.60 first. So that is starting to make a little bit of sense in the idea as to why we keep holding open this gap and not going ahead and breaking down now. Another thing I want to point out is that the 50-day simple moving average on Monday's open is going to rise above this 28.17 level. So the average closing price of the last quarter or so, or actually of the last 6 months or so, which is what the 50-day simple moving average represents, is going to rise above this ceiling that we found ourselves trapped under all through Q4 of 2018. So maybe this is going to feed information to the algos that gives us a burst to the upside. Also, this 50-day simple moving average is moving out of this downwards channel. Now, I thought that we were headed towards a pullback before this 50-day could burst out of here, because this would make a lot of sense to come back and back test this downwards channel that we just broke out of with this with the start of Q2, I thought that we would pull back and do sort of a triple play where we back test the 50-day, this 28.17 level, and this falling channel that we've broken out of. And lo and behold, our high this week, our current 2019 high, is 29.18. So boom, here's your perfect 100-point pullback. 90 to 100 points would get you a great, back test of this whole area here. And that's still possible if we do not take out 29.18 and make a higher high and go up and fill this gap to 29.25 and advance above the gap, then maybe this is still the plan and this is still viable. Okay, so if you are in puts and you took the opportunity to buy puts as we moved up on Friday, maybe if we are still trapped and cannot trade out over 29.18 and up to 29.25 and over and back up towards the all-time high, then there is still this plan to come back down here. And the clues to that happening are going to be that we would come in and break our 10-day simple moving average. This thing is rising up out of this gap completely as we start to trade tomorrow. Okay, we would have to come down and break the gap, make a lower low below Thursday, fill this gap, and continue on down. Okay, these levels are all marked on the roadmap. I'm just showing you here in a more simplified version with less clutter on the chart. But you need that clutter on the chart when you're navigating, and trying to decide what options to buy and stuff. But when I'm shooting the video here, this is a lot easier to just sort of point at and move through. So, so once again, we need to see a higher high over 29.18 and fill this gap to 29.25. And I think if that plays out, then we're definitely moving up. And we should be thinking about a new all-time high, starting with the simple numbers and our 80 handle rule of 29.50, followed by 29.60. And then once we get up there, we could fizzle out and have a 90 to 100 point pullback, and those would wind up holding open this gap here and just simply back testing the high that we made in Q1 coming into this quarter. Okay, if we are going to fail, and this was a sort of rolling over point here that happened last week, then we're going to come in and we're going to break the 10-day and fill this gap, and we're going to continue on down. And might take some bumping and grinding here for a week or two, dancing around with the 20-day or simple moving average or whatever. But frankly, to get this all done, to get this trifecta of back tests all done, where we pull back 100 points, back test this channel that we've broken out of, back test this huge resistance level at 28.17, and back test the 50-day simple moving average, then this move should happen pretty fast. It should happen next week, and then we would bounce off of this and work our way up from there. Okay, so I hope that was clear, and that I didn't jump back and forth between the bullish and the bearish scenario too much. And of course, I suppose there is the chance that we're just going to sit here and die on the vine for another week, while the biggest reporting week of the earnings season is this coming week. We could just sit in this range and then make that decision from there, whether it's going to be up towards 29.50 to 29.60 or back down here to wherever the 50-day simple moving average rises to at that point. Maybe that's the scenario. Maybe the market is just waiting for this 50-day to move up into here, into this gap over the course of the next week and a half or so. I think that might take, and then pull back from there. Anyway, I just want you to understand, what's going on, what's at stake, and what you should be watching. And first and foremost, it is this 10-day simple moving average, the low that we set on Thursday, and this gap that has still not been filled at 28.88. And up above, it's simply moving out above this 29.18 level, this high that we made, and finally make a new closing high to go with it, and filling this gap up above at 29.25, which is the final gap left between us and the all-time high that we made back in September. Okay, that's it. Have a good rest of your Sunday, and I'll see you in the morning.